Now let's talk about all the assets. Okay, this is a 30-year or 20-year return on asset classes compiled by J.P. Morgan. On the far right, you see commodities. They're awful. Commodities are silver, gold, natural gas, especially oil, soybeans, lumber, pork bellies. Why are commodities awful? Because humans are really good at creating more of them, and they will drive the price down using technology, ingenuity, and capital. Commodities lose you money. Cash, also pretty awful. Now, you see the inflation rate that the largest bank in the United States marks? They mark it at 2%. That's what the government tells you their inflation rate target is, 2%. That's their consumer inflation rate. That's fake, right? Every single 10 years or every few years, I'll just redefine the market basket of goods, and I'm going to put drywall and manufactured biscuits and Netflix videos and something cheap. You can be sure I take the expensive stuff and I move it out of the consumer basket, and I take cheap stuff and I put it in the consumer basket. And you're moving toward a world where you'll live in a 300 square foot apartment constructed of drywall, sitting on a cheap, rickety plastic chair with a set of goggles on while you imagine yourself in a beautiful universe with a bunch of digital stuff. And you'll get digital healthcare, and you'll get digital entertainment, and you'll have digital friends, and you'll take digital trips to digital vacation destinations in your digital jet. And everything will be good. That's the problem with the CPI. Now, look at the S&P index, right? You feel like you're a genius if you're getting 7.5% against that. But what if I told you the real inflation rate of the US dollar over 100 years is about 7.5 to 8%? That's the actual inflation. Now you see the average investor is getting 2.9% when they're smart. Commodities are less. The S&P is underperforming the inflation rate. Look in the far left. What's your best chance? It's called a REIT, Real Estate Investment Trust. If you have a property company and you buy the scarce desirable real estate in the middle of London or New York, and if you can generate a yield on it, and if you're really good at it, you might be able to just barely keep your head above water. But you know, none of these look all that compelling, right? I mean, investment consists of either losing your money fast or losing your money slow, or after 100 years of brilliance, assuming that the government doesn't fail and you don't have your assets seized. And I didn't include taxes. As long as you don't die, you don't have any capital gains, and you don't have any inheritance tax, you might barely just keep what you had 100 years ago in this world.
A lot of people think that we're conspiracy theorists. A lot of people would say what Michael just said is conspiracy theory, that, oh, we're all moving towards a more and more dystopian world, or we're all going to get plugged into some sort of dystopian thing. But I really want to emphasize that it has to get worse. Okay, you have political currency, a system reliant on trust that is not backed one-to-one. Inherently, there can be no trust. Okay, it is not sound. And so therefore, in order for it to survive, and with it to survive in the face of an exponentially decaying amount of trust, it requires an exponentially increasing amount of manipulation of information, an amount of manipulation of information of truth, and a slow debasement of energy. It is not accidental, it is not coincidental, and it cannot be reversed. It is inevitable. Okay, to restate what Michael's saying here in a slightly different way is this. The way to think about it is that money is information. The information is not correct. And so the only way to have all of society still go along with the political currency, even though it's not sound, even though it's not information that is no longer 1 + 1 = 2, the only way to have is to manipulate information everywhere else. And that's what, Michael's talking about here with the CPI basket, right? It's not a conspiracy theory to say that the government is going to change the basket of goods in someone's lifestyle to have a better CPI print. That's literally what has to happen. And if you don't do it, someone else is going to do it for you, right? every individual has their own inflation rate. I am here in the United States of America. I have a very different inflation rate than someone down the street. I have an entirely different inflation rate than someone 3 blocks over. I have an even more dramatically different inflation rate than a person across the planet, right? Every single individual has their own needs, their own desires, their own mixed basket of personal goods. And the government picking an arbitrary basket of goods, they're obviously going to pick the lowest ones. They're obviously going to pick the ones that give the perception of the slowest rate of death of their political currency. Okay. And that's really important to keep in mind, that as those things change in that basket, right? In the same way that we've swung from gold to equities, and we may swing back to gold, in the same way as that example before, we will swing different assets at different times. And so the government will always add or subtract from their CPI prints what the real basket of goods is this time, right? Here in America, we've had higher than normal inflation since 2020. Okay. The actual inflation rate's been much higher. And people wonder, they say inflation's 8%, but I go to the store and the price of this is doubled, or the price of that's up more like a third or double, or up by 50% or quadruple. Everything's changing at different inflation rates because everything has a changing amount of scarcity, a changing amount of demand, and the currency at which we're pricing those things in is also having a radically changing amount of supply and demand. And so the point here is that if you're trying to communicate to people in that political problem, they don't understand that it's a political problem. They're going to have a hard time understanding that there's no political solution. It has to get worse. Like, there is no way that a political problem is going to willingly or forcefully create a political solution to solve that political problem, right? You have the layer 2 politics atop of energy. There's a disparity between the two, and that you're not going to have them realign. The only possible fix is to have from the bottom up, okay, from the bottom up, reform everything, right? In the same way that the birds, if we think of the feathers or the dance that they do as the layer 2 to the energy, being the calories they have, you can't fix the politics until you fix the energy, because the whole industry, and I will call it industry, the whole industry of politics is about channeling energy. And so if it's not back to 1-to-1, it has to decline. It has to get worse. And that is the point that Michael is pointing out here, that if you're trying to solve a political problem from within a political system, that it's just going to continue to decline. And as Michael said earlier, this is the best it gets. Okay, we have been in the most prosperous time of the most prosperous nation in the planet, the last few decades of the United States of America. And unfortunately, we're having a lot of things change. And that really needs to be kept in mind. And that's why Bitcoin is so important to consider.
Most investors, they just perform poorly because of bad habits. What kind of bad habits? This is a 30-year chart of returns on the S&P index. And this chart tells you that if you missed one day, there's one day every year when 85%, 90% of all of the gains come. One day. And there are 36 hours a year when all investment return takes place. So in 365 days, nothing happens 99.5% of the time. This is why we have the laser eyes. This is why we say hodl. Because, and I have said before, trading Bitcoin is a sign of lesser intellect. If I were to say 1% of the days you could trade successfully, I would be overstating your odds of success. You literally have to find the 24 hours out of 365 days when the market moves, and you will be wrong 99+% of the time if you trade. You're going to sit here and Bitcoin's going to be whatever it's going to be, and then one day you're going to wake up and it's going to double. And if you miss that day, you're going to be kicking yourself. HODL, don't trade. Most people destroy themselves by thinking that they actually can time the market. This is a chart as of about a month ago. And what it shows is year to date, 1% of the companies in the S&P index had all the gain. If you look at this chart this week, the number for there are 493 companies in the S&P index that have collectively 0% return, and there are 7 that have 50% return. And another way to say that is 99% of the companies cannot keep up with inflation. You think you're going to pick stocks? You're going to pick the winner? There's a 99% chance you won't. And maybe there's a bigger idea here, which is if you have one of the greatest companies in the world, there's a 99% chance after 100 years of being great, you still can't keep up with inflation. And this is why I say maybe your hard work doesn't matter as much as government policy matters. You're not going to find the winner 99% of the time. And you remember I've said before, diversification, it's selling the winner to buy the loser. Right? All these really brilliant investors that diversify, if they're smart enough to buy Apple or Amazon, when they diversify, they go from 44% return to 10% return. And if you manage to get it right, you may be the 0% return.
That is extremely controversial to people that are not in Bitcoin. I'm like, oh, diversification is bad. What are you talking about? Diversification is important. My financial advisor says diversification is important. Just intuitively diversification makes important. I don't know the future. Why should I be so arrogant and so overconfident to be all in on something when I don't even know what's going to happen tomorrow, right? Good point. Now, to give some more context, to that point that you're saying that's very valid, and to what Michael is saying here, the point is, in the modern world, our money is not attached. Our political currency is not attached to something with real energy to create. We can just create more zeros, right? Granted, we sometimes create zeros a little slower than other times, but we're always going to create more political currency. And so you have to own something for your retirement, for your kids, for your future, something that's going to hold its purchasing power over time. Michael just made that point very well. And when you don't know the future of that complicated world of the macroeconomic, you don't know what wars are going to start. You don't know what trade routes are going to be created or destroyed. You don't know what's going to change in the world. You don't know what innovations are going to happen. You don't know what companies are going to go bust. And so the only way to operate in a world without money that takes energy to survive is to diversify into a mixed basket of goods that do require energy to produce and save in that. Right now, in the modern world, in 2024, we do that in a few different ways. One way is gold, one way is real estate, another is bonds, and another is corporate stock, right? Corporate stock takes energy to produce. Yes, it's ones and zeros, but it's backed, at least a little more directly, to corporate energy. You're backed by the earnings of that stock, right? Price to earnings ratio, PE ratio, right? Gold obviously takes energy because you have to mine it out of the ground. Obviously, it takes energy to produce. Real estate takes time to build. Diamonds, you have to either create or dig out of the ground, right? Same with silver, same with everything else, right? Bonds also, I won't get into bonds, but the point is all of these things take energy to produce. And because you don't have any form of money, you're creating a mixed basket of things that do require energy. You're trying to recreate this. That's what you're trying to do. This world in the early 21st century where people diversified a mixed basket portfolio of commodities and equities and corporate, or government debt. We diversify in that because we're trying to recreate money in a digital form. We don't want to save our life savings in gold because, number one, like I said before, it's hard to transact. And number two, you have a single point of failure. If I'm storing this gold in my house safe and you break in my house, you get the gold, right? Which is why I don't really hold gold long term. And I'm getting rid of this coin pretty soon. But that's the point, that if you hold analog money that does have energy backing it, you have a single point of failure. That is you in your house, right? And likewise, when you have this form of digital money, that's what you're trying to do. You're trying to create a digital money by having a diversified portfolio. And the hope is that the overall returns of that sound or more sound form of digital proxy money by having a diversified portfolio of goods is going to save your energy better than the government created currency that is not just ones and zeros out of thin thing made out of plastic, right? That's the point. That's why we have these portfolios. And that's why the importance of these portfolios has exploded in value over the last 80, 90, 100 years, right? The inflation rate after 1971, when we detached from gold, has become much higher than it was in the 19th century and the early 20th century, even in the United States, right? That's why these investing things have become so important. It's why everyone, especially the last 20 years, has become so focused about trading, about flipping, about these finance gurus and all that. Is because it's becoming increasingly important to create a digital proxy money with a diversified portfolio of various assets that take energy to produce in a world with the context that the predominant form of digital money is political money is declining and dying and having less energy backing it every single year, or having less energy being able to be exchanged for it every single year. And so the point is, yes, diversification makes perfect sense in a world where you don't have Bitcoin. In a world with Bitcoin, diversifying out of it does not make sense. And the reason is because that diversified portfolio of things that take energy to produce, you're basically trying to get an index for the world, right? What's the best you can do? Okay, the biggest government in the world, the biggest country, biggest economy in the world, United States. Okay, let's get American debt. Okay, maybe we get some international debt too. Okay, equities. Let's get the broad index of America's stock market, right? Maybe some international stock too. Let's get the broadest index of the world human productivity we possibly can. And that is our form of digital money that then we price in forms of political money. That diversification makes sense. But Bitcoin comes in, and Bitcoin says, I not only have that much diversification, I have more diversification because I can onboard the hundreds of millions of billions of people that are not banked, like you spoiled rich Westerners. Okay. I am 24/7, 365 days a year. No one controls me. All energy. I am the backing of it, right? That's basically what Bitcoin's trying to be. Basically, the S&P 500 or the NASDAQ or the Dow Jones are trying to index American corporate innovation and productivity. Bitcoin is trying to index the entire globe's worth of productivity. So Bitcoin's actually more of that, right? And so the point is that in a world without Bitcoin, diversification makes sense. But Bitcoin is a thing of itself intended to destroy diversification, right? Because that is what you're trying to do with your portfolio. You're trying to create a digital money. Bitcoin is the digital money. And so you no longer have a need for the diversified portfolio of proxy digital finite money, right? It's the same thing with the horse and the locomotive, right? The horse makes perfect sense. The horse is the perfect thing to do in a world where biological means are your form of transportation, right? You don't walk, you don't ride a camel, you ride a horse if you really want to get somewhere. But in a world with a locomotive, in the world with coal and fire and steam, the horse no longer makes sense. Again, it's a technological change. Political currency is a technology. Bitcoin is a new technology. And the innovation, right? People wonder, well, Bitcoin's not faster or cheaper. Why is it better? It's because it's a scarcity and because of its properties. It is that. It is the removal of the need for diversification in of itself. And so hopefully that context makes a bit more sense. And to that point, in regards to Michael's earlier point about trading, you do not trade that. Are you going to trade the index for human productivity and human prosperity? Are you going to go short humanity? Oh, I think humanity's got a less bright future. I don't think, I'm going to go buy gold, right? Because I am going to go out there and make with my own capital, I'm going to go out there and buy gold and hoard it because I think that humans aren't productive enough. They aren't ingenious enough and they aren't innovating technology enough that they're going to dig more of this out of the ground. They're not going to dig more of this out of the ground. They're not going to increase supply. That's what you do when you buy any of the assets within that ancient world diversified portfolio. If you're buying houses, you are taking a bet. I don't think humans are innovative enough, have enough ingenuity to build more housing. I'm going to go buy oil because I don't think humans are going to go dig more oil out of the ground and dump more supply in the market. I'm going to go buy diamonds. I'm going to go buy gold. I'm going to go buy corporate equity. In a world where you don't have finite absolute digital scarcity, that makes perfect sense. It's the best you can do. They're the things we can create the slowest. We can innovate and create gold, innovate and create gold much slower than we can create and innovate new political currency, just ones and zeros out of thin air, right? But again, Bitcoin changes that fundamental understanding. And that's unfortunate. Most people, especially in the finance world, don't understand about Bitcoin. I think this is why engineers like Michael Saylor, by the way, engineering background at MIT, it's what the engineers understand from an energy first principle, right? The majority of this whole video so far, my end and Saylor's presentation I'm reacting to, have to do with energy, right? It's not from a portfolio theory finance perspective. It's from that energy perspective. Again, he started his conversation out with there is an economic war. And so if you're going to try to time that, to trade that, I wish you good luck. But as Saylor said, less than 1% of the time in Bitcoin is when the market reprices, right? Because humans are extremely emotional, because information around the planet changes extremely quickly. And what's going to happen is that pricing something that takes energy to produce in terms of a political currency system designed to exponentially decay every single year is going to get harder and harder to do. A lot of people outside of Bitcoin that hear that, oh, wow, Bitcoin, or excuse me, Luke is a Bitcoiner. Wow, it makes YouTube. Luke, how's your Bitcoin trading going? Luke, how's your, Bitcoin portfolio? People outside don't understand because they're not, again, they're looking at it from a political lens, right? People think I'm trading Bitcoin. I'm not trading Bitcoin. I don't leverage trade Bitcoin. I don't day trade Bitcoin. I don't swing trade Bitcoin. I don't anything trade Bitcoin. I buy Bitcoin and I hold it, right? I would not trade gold. I would not trade diamonds. So why on earth would I trade Bitcoin? My encouragement to you, and I'm going to make this point really clear, is with Bitcoin, I encourage you, number one, learn about Bitcoin and buy some. Number two, take self-custody and don't have single points of failure. Don't store all your gold under your mattress at home, right? You're transferring single point of failure from someone else to yourself, right? And that does have a variety of risks. Because the point is, once you understand that the main risk is not having Bitcoin, and then once you have it, how are you storing it? You realize, why on earth would I trade it for any other inferior asset, right? And the internet, the big winners for the internet were the people that innovated solutions to monetize the global communications layer of the world, the internet, right? Amazon, Apple, Facebook, Google. They were the big winners. Okay, the way to win financially in the first part of the 21st century up to now was to buy a portion of the internet's monetizable arms. Okay, not trading. Yeah, maybe you could have made money trading. Yeah, maybe you could have money doing this and that. Whatever. The big way to win is buy that, right? The way you can think of Google, the way you can think of Netflix, the way you can think of Amazon, the way to think of them is that they are like layer 2 shares of the internet. The single best trade you could have made at the turn of the century, from the 20th into the 21st century, the single best trade you could have made was buying a portion of the internet. Now, that's not possible. You couldn't have done that, but that would have been the better trade to make. What is the better buy than Google? What is the better buy than Amazon? The better buy is an actual share of the internet, because Google might go bankrupt, Amazon might fade away, but the internet itself is not going anywhere. And that's basically what Bitcoin is, except you're not buying a share of the productivity, ingenuity, innovation of the internet. You're buying that of the whole planet. And that is the opportunity of Bitcoin. It's not that, oh, Bitcoin's going to get you rich quick and you can trade it and sell it, make it for a big fiat profit. It's like, no, Bitcoin is the numerical system pricing in perpetual increased energy for the human race.
So that leads us to the question, what is money? Right, because investment assets aren't working so well. What is money? Well, in theory, money is a way for you to store your economic energy and not have it stolen from you by the government, by a bad investment decision, right? Perfect money is, in fact, the solution to all your problems. But what is good money? Gold has been an aspirational money, but it's defective. And the reason gold is defective is because we keep creating more of it, and you can't custody it. And so if I keep creating 2 or 3% more, then that means that the half-life of your economic energy in gold is 35 years. It means every 35 years, your money is cut in half, or the value of your wealth is cut in half. The only way to make gold perfect is to stop mining it and make it possible to teleport and carry around in your head. And of course, this is not happening with gold. It is difficult to create sound money. How difficult? Well, Bitcoin has gotten 50 trillion times more difficult to mine since it was formed. 50 trillion. Now, what is that telling you? Well, for the money to be sound, I have to cap the supply. And in order to cap the supply, I have to make it exponentially more difficult to create it. And human beings in this small corner of the world, Bitcoiners, who have been ignored, they figured out how to create 50 trillion times more work in those 14 years. That's what you're fighting against. And that's why commodities make awful money. That's why anything that can be produced with human intellect and capital will always be awful money, because you're betting against human intellect. I'm going to actually store my money in something that you can make more of, and I'm going to bet you're too stupid to make more of it. Okay, that's an awful bet. Somebody somewhere with less money than you has a lot of time on their hand to figure out how to get your money. That's why you need something like the difficulty adjustment. And that's why it's so difficult to create sound money. Bitcoin is sound money. Now, people around the world use all sorts of assets in order to store their economic energy. All these monetary assets have a different natural frequency. For example, oil gets produced with a stock-to-flow ratio which is extremely low. The Argentine peso is doubling in supply every 1-2 years. Silver is growing at a fairly rapid rate. When the dollar inflates at 7% a year, that means that over the course of 10 years, you double the supply of the dollars. So therefore, the half-life of money in a dollar is 10 years. As the stock-to-flow ratio goes up, the half-life in the money goes up. The natural frequency slows down. Gold has a half-life of 35 years. Obviously, gold is a better money than the peso. It's a better money than soybeans. But now you see, the real key is, what is the natural frequency of the asset? And what's brilliant about Bitcoin is it started with a higher frequency, but that natural frequency is going to infinity. It's becoming a very low frequency money. Next year, after the halving, stock to flow is 120. The half-life of your economic energy in the money of Bitcoin goes to 100 years. In the year 2036, the half-life of your economic energy in Bitcoin becomes 1,000 years. In 2048, the half-life of your economic energy in Bitcoin is 10,000 years. Now, politicians want to tell you that this is impossible. Commodities and nature tells you this is impossible. But look at my chart here. In your lifetime, there is one asset that has a long enough frequency that you can actually expect to keep your money forever. This is economic immortality. When flow goes to zero, stock to flow goes to infinity, the money lasts forever. If the money lasts forever, you have hope. What is money? Perfect money is a way to escape the misery of the economic war that is depriving you, your family, and your company of 99.9% of everything you have with absolute certainty. And there is no amount of work, and there is no amount of trading, no amount of thinking that is going to escape this reality. You're going to have to find this solution.
50 trillion. That is really surreal to think about, but 50 trillion increase in the difficulty to create Bitcoin, right? Like, what if I told you, hey, guys, I think I think the difficulty to mine gold is going to increase by a factor of 50 trillion. What do you think is going to happen to price? Okay, Michael Saylor recorded that conversation in 2023, mid-2023. Okay, from then to today, it has gotten 60% more difficult to mine Bitcoin. Hash has increased by 60%. Okay, so it's no longer 50 trillion. It's actually more than 50 trillion, right? And even though it's a little outdated, the number, it proves the point that it's perpetually getting more expensive to produce Bitcoin indefinitely. Okay, and that is the design. I often say online that anyone that's criticizing Bitcoin, anyone that says, oh, Bitcoin's a scam, Bitcoin's a fad, Bitcoin's whatever, I always reply to them and say, if you, or I tell people when questioning the validity of someone that does not like Bitcoin when questioning their arguments, you have to ask them, do they understand what the difficulty adjustment is? Like not what is their opinion of it. Can they technically understand what it is and how it works? That is extremely important, because the difficulty adjustment itself is one of the tent poles for the backbone of Bitcoin. And most people going on TV or telling people that Bitcoin's a scam or it's a fad or it's a Ponzi collapsing to zero, whatever, with nonsensical headlines like they have been for over a decade, if they're out there saying that and they can't, on a technical level, articulate what is the difficulty adjustment, how does it work, and what is the argument for it and against it. If even opinions aside, if they don't even know what that is, you should not take their opinion seriously. They have not done any research into Bitcoin. They don't understand any of the potential value of Bitcoin. They don't understand the argument. These people will go out there and have these long rambling posts and articles and speeches online or on television, mainstream television, and they don't even know what that is. Some people, I know this might sound extreme, but some people are just deer to headlights. Like they don't even know what that is. They haven't even heard of it. It's amazing. It's preposterous. And so the point is, that's what's important to understand with Bitcoin. Bitcoin requires a perpetually more and more amount of electricity to produce, right? This is the big deal with the halving, right? People talk about, the Bitcoin halving happens every 4 years. Really, the way you can think of it is that cost to mine Bitcoin doubles. I mean, kind of, I know not literally technically, but that's the idea, right? Is that basically Bitcoin is programmatically designed to require more electricity to create perpetually without the control of any human being. And so therefore, as long as you think in the future, people are going to want electricity or things that you can convert into or out of electricity, then you could take the speculative bet that it's going to get more expensive, right? Oh, but I can't eat electricity. It's like, yeah, okay, but I can't eat gold. Okay, I can't eat gold. And yet it's still valuable, right? Yeah, I can't eat Bitcoin, but I want electricity, right? I'm recording this on electricity. You're watching this on electricity, right? You can't eat dollars too, for that matter, right? I mean, the point is that it's not if you can eat it or not that matters. What's important is, does it take energy to produce? It doesn't matter if it's dirt trying to get to gold or it's electricity trying to get to Bitcoin. If it's going to get more and more difficult to produce said thing perpetually, you can take the reasonable bet that in terms of everything else that do not get as difficult to produce as fast as that thing, that is, the price is just going to continue to rise indefinitely in terms of all those other inferior assets here. So I think that's a really important point to make. And as Michael says, look at the chart. Bitcoin's been around over 15 years now. It's gone from less than a penny to 10 pennies to $1 to $10 to $100 to $1,000 to $10,000, now on its way to $100,000. It's going to $1 million to $10 million, $100 million, $1 billion, $10 billion, $100 billion, $1 trillion, upwards, indefinitely, perpetually to the right, both in nominal and in real purchasing power. That is the winning strategy. To people that don't understand that it all comes down to energy, and instead look at things through a political lens, they're not going to understand why Bitcoin's skyrocketing. Like Michael said before, there'll be 1% of days or less than 1% of days where Bitcoin doubles or goes up, a lot. And people will say, oh, wow, that makes no sense. Bitcoin's a bubble. It's going to die. It's going to collapse. That was me at one point. It's a scam. Or as Michael Saylor himself said back in 2013, it looks like Bitcoin's going to suffer the same fate as online gambling. Obviously, he's changed his mind. Obviously, I changed my mind. And most people also are going to change their minds, right? Basically, people are going to go from, instead of looking at it through a political lens and thinking, why is this thing just skyrocketing up and up? 90% of the time it does nothing, and only 1% or less than 1% of the time it just does something. Why is it doing something? It's not backed by anything. It's just random. But what they don't understand is that it all comes down to energy. Bitcoin is repricing everything else, everything in the world simultaneously, right? And this is what people don't understand with all their other assets. I'm not here talking about some stock somewhere. I'm not here talking about some other commodity or some other thing. I'm not here pumping gold, even though I'm using this gold coin as a prop. I'm not pumping. I'm not talking about it, okay? Because Bitcoin is in a competition with every other asset simultaneously. Your house, your stocks, your bonds, your cash, your diamonds, your car, everything that you own, Bitcoin is in a direct competition for its monetary premium. It's an economic war. Granted, It's in the economic world, and it's in the free market economic world. Thank God it's not in the analog world, and that's the whole point of why we're trying to accelerate Bitcoin adoption and move away from political currencies, because political currencies often deteriorate into analog physical war and violence. I would much rather have the monetary war of Bitcoin than an actual global war or international war fighting for who gets to control the political currency. Just let Bitcoin win the economic war, right? And that's an important point to make here. That's what Michael's showing with these charts here. Bitcoin is winning. All these other forms of monetary premium are collapsing in terms of each other, some more, some less, but all of them in terms of Bitcoin. Bitcoin is repricing all of them because it is a sole victor without a general. All these other things are not being victorious, and they all require human oversight. They all require generals. They are not constant every day, 24/7, 10-minute blocks, block by block by block, requiring more and more energy to produce. That is why Bitcoin is so powerful, and that is why, as Michael Saylor is saying, you're looking out for the next 1,000 years, 100 years, 10 years, 5,000 years. It doesn't matter. Theoretically, if Bitcoin continues to have a finite amount, if it continues to be repricing everything else perpetually, is perpetually going to be a good buy if you're optimistic on the future of the human race. Hey there, if you're considering going to a Bitcoin conference, I highly encourage you to consider Prague in June of 2024. There are lots of great Bitcoin conferences out there, but this one in Prague is one of the largest ones of them all. And there are a lot of amazing things with this conference uniquely that I think you should potentially consider. I did not go last year in full transparency, but it was only their first year, and they had an incredible lineup. Michael Saylor was there, Adam Back was there, Robert Breedlove, Stefan Rivera. Many people were there that I felt a lot of FOMO. Frankly, I wished I was there, and so I'm very grateful to say that I reached out to the Prague team and I said, "Hey, I wanted to go to your conference last year. I didn't. I don't want to make that mistake this year, and so I am going. Very grateful to say that I am going to the Prague conference in June of 2024. So if you want to meet me, if you want to meet all the other Bitcoin speakers there, and again, they have a really great lineup coming. A lot of things they haven't even announced yet. But it's a really good opportunity. Yes, if you're in America, where you might be watching this, it's a longer flight over there, a bit more expensive travel to get there. But once you're there, you're in Europe, and things are much cheaper than they are in the US, at least in Prague. So that's something really keep in mind, that it's probably a lot more realistic than you think. And I think it's going to be a really low noise and really high signal conference. So if you want a good place to go, consider going there. I am offering, a discount code for there, right? I am speaking there, so I do have a discount code. You can get 10% off. Actually, you can get 15% off if you pay in Bitcoin. But even if you're paying fiat, you can get 10% off. So click the link in the description. You can get 10% off your ticket. If you're going anyway, you might as well use the code. And hopefully I'll see you there. Would love to see you there and meet you before or after, the conference or whatever. So comment down below if you're going or not. Would love to meet you. So put the link in the description. Click on that to buy your ticket. And comment down below if you're going, and would love to meet up. So thanks.